Well, on the back of the most highly watched data point this week, we're getting some reaction to how the Federal Reserve could attack its monetary policy playbook from New York Fed President John Williams. Now, Yahoo Finance's Jen Schonberger has the latest there. Hey, Jen.
Hey, Shauna. New York Fed President John Williams just beginning to speak right now in New York on the back of that PCE number, saying that while the decline in inflation is welcome, inflation remains too high, and that, quote, the Fed's job is nearly not done. In a speech right now, Williams saying, quote, his assessment is that we are at or near the peak level on the target range of the Fed funds rate. He says, based on model estimates, the stance of monetary policy is quite restrictive. In fact, the most restrictive it's been in 25 years. And to those on Wall Street who are pricing in rate cuts as soon as March or May of next year, Williams had this to say. He says, I expect it will be appropriate to maintain a restrictive stance for quite some time to fully restore balance and bring inflation back to 2%. Williams also added the caveat that if price pressures and imbalances persist more than expected, additional policy firming may be needed, so keeping insurance there on the table for potential more rate hikes. However, he does expect inflation to continue falling. He expects inflation to end the year around 3%, which is where we are right now. And then he sees inflation continuing to drop next year to 2.25% before closing in on that 2% goal in 2025. Of course, his comments coming on the back of a fresh reading on the Fed's preferred inflation gauge, the core personal consumption price expenditures index, which continue to show progress. But as Williams' comments underscore, while the Fed is encouraged by this, they're not ready to declare victory yet. They need to see more months of data, more progress before they will probably take those potential rate hikes off the table and say, we're going to hold steady here, guys.
Yeah, there's a lot to continue to break down here on this. You know, Jennifer, while we have you, we're still continuing to get some of that Fed speak out, both from Daly, from Williams. I mean, as you've been mentioning, Williams saying forecasts up and downside risks for inflation, and also saying that inflation will close in on 2% in 2025. There's a lot of time between now and 2025. Right. So are we just perpetually in the camp of trying to figure out if there's going to be a soft landing between now and then?
I mean, it really depends, right, how the economic data play out. We are seeing a gentle cooling here. We are seeing inflation gradually moving lower. If productivity is indeed surprising to the upside, then we can get that soft landing. But I think that those on Wall Street who are pricing in rate cuts as soon as March or May of next year are very premature at this point. The Fed is content to hold at heightened levels, probably where we are right now, through the balance of next year to make sure that inflation is back down to 2%. They don't want any head fakes. They don't want to repeat what happened in the 1970s, where you saw a U-turn on inflation. Now, whether or not we can get that soft landing and as they hold at that level, of course, remains to be seen.
Jen, it's Maddie here. Just following up on some of the notes that I'm seeing hit my inbox from banks this morning. Bank of America with a headline, the path to 2% is on track. Another headline saying cloudy with a chance of landing. And certainly Finn Twitter this morning declaring the Fed's fight against inflation done. What more evidence is the Fed going to be looking for? If you had to pick one single data point, what are they looking for to confirm what the street and what Twitter is already saying here?
So I think they're going to need to see more continued evidence, right? We heard from Fed Governor Waller just this week saying that if we have a couple more months of continued slowing inflation, both measured by PCE and CPI, they will feel encouraged, or he will feel encouraged, that the Fed can continue holding at these levels. If we peel the onion, as Fed Chair, New York Fed President Williams likes to say, and we look at the housing piece of this, that is going to need to come down further, and Fed experts, Fed officials rather, do expect that to continue coming down. So they do expect a downward trajectory. They just need the data to confirm that. Again, they don't want any head fakes here.
Jennifer Schonberger and Madison Mills, thanks so much for joining us here this morning. Really setting up today's trading activity and what investors are going to be watching for here as well. We appreciate it.